Good evening. Ira Epstein of Linn Associates with your financial market wrap-up for a wild trading day on this Tuesday, November 10th, 2020, and it's just after 7 p.m. Central Time. It's a long trading day for me, I can tell you that. I have some emails I have to get back to people on, just haven't been able to do it. I apologize. When you look at the markets, let's just understand where we're at so I don't have to repeat it for each chart. The market is still digesting the results of the election. I think that 80–90% of America accepts the fact that Joe Biden is the president-elect. It's a massive uphill battle for the president. Anything can happen, but I'd give the odds of it like that. The odds are there, okay? So you give the person that was in control for 4 years, he has his right to court. He's exercising it. Nothing wrong with that. And remember, he has a massive amount of people. Think of how many people voted for him. So nobody's going to go out and attack the president on the Republican Party. In due time, he'll do what he does. But the market's already accepted him. So let's get to that. What the market is now digesting, even more important, I have to say that, is the COVID-19 vaccine. We have heard today that it could be deployed if the government releases it this month of November. Now, that's still going to interrupt the Christmas holiday period for certain. For Thanksgiving, forget going to family members and all. You know, this thing's out of control. If you don't believe me, look at your local state numbers. Every state is in trouble. Illinois setting records. We have a 12% positivity rate for those taking the test. That is higher than anything. You know, it should go into a lockdown. Nobody wants to lock the economy down again. We saw the repercussion. And the good news is we know how to treat it better than we did before. So if you go to a hospital, the treatments are different. However, you're still having to adjust to what that's going to mean for demand in energies. In the grain markets today, we had a WASDE report that showed that we're going to have smaller U.S. crops than we thought in soybeans and corn. Both markets took off to the moon today. China's not through buying. They have a lot more to buy, and I expect them to do it. In the markets here, the metal markets, copper fell back to its 18-day average found support. In the silver, I have done a silver report for all of you. It's 15 to 20 minute long video, by the way. I covered in great detail everything in the silver on the futures, and then I move you right into the ETF, the SLV. So I'll talk about it at the end of this, but it's there for you to view. In the foreign currency market, you're seeing that the euro is trying to hold this 118 area. So let's go to the charts and let them tell us what's going on. If the market were to close today for the week, which it's not going to, and by the way, thank you, vets. Tomorrow's Veterans Day. Thank all of you. If you look at this market, you get up to 35.35, right? So as I'm looking at what the market did there, that's still up for the week, 34 points, and it's over the highest close we've had. So this market's in very good shape, 30 points roughly over the highest close so far. The market is nowhere near what it spiked up to 48 hours ago, but it's consolidating. That's the right word. The pattern on the chart is still bullish. You have a market that's got higher lows. See these two arrows? They're connecting them, and a higher high. We don't know what today's action's going to do yet. If the market falls through 35.0650, this number will drop. You'd break this pattern should you take out this low right here, and that low is 34.5675. Would that turn the market bearish? No, but it would take you out of this thrust that you had to the upside. Why wouldn't it turn the market bearish? Because if you did that, you still have under you support at the 34.18 level, which is the 18-day moving average of closes. It would give you a pattern if that were taken out, and I'm not saying it's going to be, but if it were, you'd have a higher high, lower low into that, even if you closed under that number. You don't have the pattern of lower highs, lower lows. So all that can do is neutralize the market. In terms of the Bollinger Band, I'll stick with what I teach. The first time you hit it, That's where I believe solidly pros take money off the table there, and the rest of the world thinks, oh, it's going to keep going. They're buying, and they get themselves caught real good. You got to understand what these algorithms do. Does everything work all the time? No, doesn't have to. It's got to work really high percentages, and that's what you're trying to do. When you're over the 18-day average, should you be trying to go short? The way I teach charting, never. It's one thing to come out of longs. It's different for a guy saying, oh, I'm going to catch this top and ride it down. Sure you are. I've owned brokerage firms, stock firms, and commodity firms. And I can tell you, the people that trade the trends do a lot better, I've seen, than the top and bottom pickers. I'm not the first one to state that. You can go back and ask other people. You want to be with the herd. That's where the trend is. When you're looking at what the market's doing right now, I believe that momentum leads price most of the time. You know, every day, no. Certainly this market jumped smartly off of the COVID news and elsewise, but you're overbought. I play the percentages. If you embed where both numbers get over 80, I get excited bullish. But when you just have one of the numbers over 70, it's overbought. Do I want my clientele that I'm advising on buy here, sell there, buying an overbought condition? No, I want them buying embedded. I want them buying an uptrend that isn't overbought. Those are the areas that I'm looking at. Why am I saying buying? Because the trend is up, the bias is up, but you're overbought. In the NASDAQ, what number did you fall to? How often do you hear me tell you? And this is, let's go back here. This is the market on Monday. And I said, now that you broke that, it would not be uncommon to get back to the 18-day average of closes to see what this market's made out of. That's what the market did, and that's where the market is hanging. You are not in a trend. You're in a transition market. The market peaked out 48 hours ago, pulled back from there, sitting right now trying to figure out what its next move is. Momentum is down because you see it pointing that way. Bias is up as price is still over the 18-day average, and you have no swing line trend. The Dow is fighting to get out of what we'll call a vertical price rise. This is a market that's got right here. If we look at that, I'm just going to draw this for you for a moment. The low, and it came in right at the 200-day average. You know, I'm not going to go back into all the things I say about that. I think shorts got out here. The market zoomed. With today's action, let's take off tonight. You have a lower low, a higher high. That is not a trend. And you are trading between the lower Bollinger Band, the upper one. And where would you buy? Let's assume you buy here. Tell me your stop. I'd like to know. If you put it under the most recent low, well, that's a suicide trade. It's 3,000 points. You know, suicide in terms of money, not that you'd be right or wrong. Where would you go short? Why are you going short? This is not a trending market. This is a vertical move, and you got to let it set up its trend. In the Russell, this is a trending market, very different. You're coming in with the higher lows, higher highs. So you've hit upside targets. The market is digesting that, having great trouble getting beyond the upper Bollinger Band on a closing basis. The market is over that number. It finished over it right here. It finished over it today. And now on Wednesday, it's trying to get to the right-hand side. Each consecutive day it closes over. It's like pulling a rubber band. You can get 5 or more. Go on your chart and count how many times you can find 5 times in a row in these markets that you close over or under. And do it to each one. They're a little different, but they give you a good idea. Do your own homework. You will see the percentages. And that's what you're looking at. We see the trend is up. We don't have to be told that. We see the market, it's got a reading that's still overbought. On pullbacks, I think most of us are looking to say, is there a buying opportunity? But there isn't, as far as I'm concerned, unless these numbers either embed where they go sideways over 80 or they correct lower. I wait. In the VIX, the market is still very much in a downtrend. It's oversold as can be. The downside target might be the 2145 level, and if it's hit, I think that you're going to see the pros, as they've done in the past, write puts to get back to the 18-day average of closes. That's what I think they'll look at. Should it be the 18? Not this time. It should be the 100. It's the closer number. Let's assume it doesn't do that and goes up. As long as you stay under 29.44, you're in a downtrend, but you're oversold. If you get through that number, then I can see a pattern of a lower low, higher high into resistance at 30.95. The big question is, what should volatility be at this point? How much insurance do you have to have? I think we're all feeling better, so the market's taking premium out, not putting it in. In the bond market, you're running the lower Bollinger Band. You're oversold, not embedded, not trending. You have a higher high, you have a lower low, but notice what you'll do. You get under the band, and now you're trying to get to the right-hand side. Is the market going to go even further down? Well, there's nothing here that says, first of all, that it's got to rally. If it stays to the right-hand side, that's fine. It is oversold. You don't have an outside day, you just had a lower low today. Inside trading day, if anything, you see that? You didn't do too much. Yesterday's low in the market, 169.29. You have a low that is higher than that. You have an inside day. I don't know what to do with that. Inside days, some traders will label them as pauses, and it makes sense. Now, where do we go with all this becomes the biggest question. In the 10-year note, you're riding the band as well. Same type of pattern, higher high, lower low, oversold. Dollar index, you've gone from upper Bollinger Band to lower. Not in a trend. Vertical move, all happened in 72 hours, and the market ran out of steam here. It fought to go higher and failed. And we had talked about this before the election occurred, right in through here. And I told you, I thought the pros were coming out of the market right these 2 days. Don't believe me? Look at these videos. Go back to them, and I know what I said. Right in through this area. This was October 30th. We're only at the 10th. And then you fell back here. Now I'm arguing with you saying, this market doesn't have a trend. The neutral number is 93.12. Eurocurrency, no trend. You have a lower low and a higher high. Neutral's the 18-day average. It's right where you're at. You don't have a setup, in my opinion. In the Japanese yen, what a drop that was. I guess the market said that it doesn't need a safe haven, because you got a lower low and a higher high. That's not a trend. 18-day average resistance, oversold. There's a lot of nothing on these charts. Now, Bitcoin, you're flirting. The word is flirting. You haven't done it with losing the embedded reading. Until it's lost, it ain't lost. Do we understand that? So the bulls are in control until that's lost. Target 16,302. Lose this or act like you are late in the day, not at this hour. Then you might be getting the profit taking that sets in and maybe carries the market. It could even carry it to the 18-day average. I need to lose that embedded reading for 2 days in a row to come to that conclusion. Haven't done it. I'm not even looking for it. It's embedded. I'm still in the bull camp. Now we're getting a differential where the Brent is gaining on WTI and staying above it. So that gives it a bit of an edge. It hasn't really gone anywhere. We've been in this 189 differential for a long time. And when I look at the Brent, I have an uptrend, higher lows, higher highs. The first resistance is the 100-day average. The market held very nicely all these numbers. First target was here. Second target's up at the upper Bollinger Band. You are overbought, so I wouldn't be betting you have to go up there. Be a bit cautious. Correct the market, get out of overbought. I'd get interested on the long side. Same in WTI. It's very hard to get bullish, though, after this move. There's no reason to be bearish. It's just hard. Where do you come in with a reasonable risk-reward ratio? I think prices are getting up to an area where resistance is going to be $43 in WTI and around $44.80, $45 in the Brent. I don't see anything to stop that just yet. In the heating oil market, all hands on deck, you're over the upper Bollinger Band. That is not an area that I'm comfortable with. I do think the smart money came out right here. The combination of the Bollinger Band and the 100-day average, and yes, you're over it for 2 days in a row. So what? It's not about catching the last dollar. It's about catching the move, and the move right when you crossed here gave that trade. You're overbought in a resistance area. Now that you're through the 100-day average, the question is, does 124.05 become the support zone in the market? Then we get to January natural gas, which is still in an interesting zone. Now, let me explain this. Let's get rid of tonight's numbers and go to Tuesday. Both numbers of the slow stochastic, focus on this, are under 20. Both were under 20 on Monday, not on Wednesday. Now let's go to today. Will the market embed and give us 3 days in a row? If it does, as long as the market closes in the bottom quadrant of the day, I think you're going to get aggressive selling on any rally. Don't get that and get the market right up where it's either or, I think the shorts cover. It's going to be an interesting move. I say this differently because you've just come from 350 down to 296. It's such a big move that I always get cautious when you get a move of that size. Now the cold weather is coming in. Chicago, we were 75 today. We're going to wake up at 30 degrees in the morning. Yeah, 30. The storms came through, monsters, and the weather pattern has completely changed, not just here, but throughout the Midwest. Look at a map tonight. You'll see the severity of the change and how fast it's occurred. So I'm turning on my heat. Oh, others will too. Just get ready. It takes time, but that's what I'm looking at in this market. So I told you I did my silver report today, and it's a neat video. I start you off with the monthly charts on silver, then I'm going to move you to the weekly with a bunch of studies on them and explain where we're at. Then I'm going to take you into the daily charts. From there, I'm going to take you on to the seasonals and show you what silver typically does at this time of the year and at the beginning of the next year. And then I'm going to carry you from that point into price counts, which is a proprietary tool that is part and parcel of our QT Market Center. From there, I'm going to take you into SLV. Remember, I'm now covering the metals as they're moving with other markets. So in the SLV, what we're going to cover is the same things. We're going to look at the weekly and daily charts to get you going on that, and you'll see the conclusions that I'm coming to, and if I like or don't like the silver. How do you get the report? How do you view it? Actually, we don't send it. You got to go to our website. Just go to www.iraepstein.com, go to the research, click on that button, you'll see it drop down. It's going to say the silver report. Remember, it's both the futures and the ETF. I'm Ira Epstein. Enjoy it. I will talk to you all tomorrow.